Good afternoon, everyone. It's Dr. K. Let's get right to it. We've got in the middle of the July 4th weekend here, and the volumes are probably going to be a bit on the light side, as they were also on Wednesday, the day before the July 4th holiday. Not unexpected. The markets have staged a bounce since they undercut the 50-day. Just enough. They undercut just enough to put everyone on red alert, given the action of leading stocks and the major market averages, and they're bouncing here. The unemployment report today was stronger than expected, and unemployment remained firm at 7.6%. So that figures into the Fed staying on track for their plans to slow quantitative easing, possibly as early as September. And September is only 2 months away. So that rattled the markets a bit. The MDM went to a sell. UVXY model went to a buy because they're inverse to each other. We saw with the announcement that the price of the dollar surged, and the price of treasuries also soared as a result of that report. And also equally important is that big money flows, that's the institutional money, has been lagging the current bounce that we've been seeing. So that increases the likelihood that this bounce is possibly one of a dead cat variety. But that said, while the market may have brief weakness, if it finds its footing and goes higher, or if it just simply goes higher on Monday, for instance, Tuesday, then the model is not going to be sitting in the sell signal for long. It would be switching out. It's going to be nimble in this kind of environment. And again, the odds that we're going to get some sort of pullback here is greater, thus the model switching to its sell signal. As far as the recommended ETFs, if the pullback in pullbacks, generally the Russell 2000 tends to be the most volatile. So in market weakness, the small caps tend to get hit the hardest. That's why we've suggested that. But if you want something a little less volatile, then there's always the NASDAQ 100 related ETFs. Outside of that, I'm not going to really comment on precious metals. They're in their downtrend, and they're potentially telegraphing that the number of things, cross currents are numerous, and potentially telegraphing that QE is going to come to an end sooner than we think, and commodities and precious metals have been in downtrends. It could also be telegraphing that the global recession is going to continue, which means that quantitative easing is going to continue. So as you can see, there you have a tug of war here between one school of thought that says that this should be good for equities, and another school of thought that says it should create downtrends in equities. And price volume action, once again, will be our guide. Although right now the waters are fairly muddy, and the model is going to remain in this nimble manner. So stay tuned for upcoming price volume results. Gil?
Yeah, I think, Dr. K, I got to say that putting the model on a sell signal here makes more sense to me than waiting for it to come down several days. I know we had an email earlier this morning, and somebody complaining as to why we're putting the model on a sell signal when the market's up 7 out of 8 days. My response to that is, well, should we wait till we're down 7 out of 8 days when we might be hitting some kind of an oversold low? It's still a very tricky market, and like Dr. K said, it's very muddy. And I even think today it's a little bit muddy, but for those of you who've been on the chat room, you know that I haven't really taken a stance on the market one way or the other, looking to play opportunistic trades, long or short, as they pop up. I think you're right now, if you draw a trend line, for those of you who like to draw trend lines, and as you all know, I'm one of those people. You're trying to get above this downward trend line. So really, you haven't made a higher high yet. You made a lower low. Now you're pushing up. Maybe if you made a higher high, then you can justify putting the market back into an uptrend, going to a buy signal, I suppose. But I still think you're in this environment potentially where things could be real choppy, and you've got news one way or the other regarding the economy. The economy's weak, the economy's strong, and whether the Fed's going to start tapering off. My view is that QE doesn't really help the economy. So the idea that the Fed needs to continue QE for the sake of the economy, I think more for the sake of the financial system and keeping the whole thing, the whole house of cards afloat. Sorry to mix metaphors there. So that's pretty much how I look at the whole QE situation. Meanwhile, you know, I guess they have a stake in trying to get asset prices to rise, and somehow they think that there's going to be a wealth effect there. But you know, for the Fed to taper off, I think it's something they need to do. And if it caused a bear market or a severe correction, I think that would simply reset everything so that we could possibly get a real bull market and one that's related less to QE. So you know, a little bit of clearing the decks would be a good thing here, but as long as the waters remain muddy, that may not be happening. One of the things that I've considered is I look at a chart of let's look at the Nasdaq back in 1996. Whoops, something happened here. Let's take this back a ways. I'm not going to worry about the volume here, but we'll just take it all the way back to 1996. It's going to take me a little bit of time here. Let's see, we're in 2006, another 10 years to go. Stay with me. I don't want anybody falling asleep here. Here we go. And back in 1996, you know, the market had been in a roaring tech-led bull market in 1995, and that extended into 96. Some of those stocks started to top at the end of 95. I remember back then I had C-Cube Microsystems, and it topped out in November, actually morphed into a short sale at that point. But as I recall, the big news back then was, when is the Fed going to start to tighten? And so anytime you had positive earnings news, or not positive earnings, but positive economic news, you would see the market sell off. And what happened in, here we have 1996, and you see, like this year, you had a nice January, it got off to a nice rally in January, and then the market just kind of chopped around and broke out, and then it picked up some momentum going into April, May, kind of like what you saw this year, and then you topped in May, and you started to roll over. And I remember on July 5th, which I think is probably somewhere right around in here, we had a jobs number come out on a Friday, just like today's, and it was a Friday after July 4th, and the market blew apart and came down for the next several days and hit a bottom. And right around here, Elaine Garzarelli came out with her famous sell signal, and that was a bottom. And then you had a 13th-day follow-through in the market somewhere at the beginning of August, and we set off on another rally, and that was led primarily by oil stocks. They were one of the big leading groups at the time. And so you're sort of in a situation that's similar in that the market seems to be keying on what the Fed is going to be doing, and anytime there's good economic news, it may start to sell off. Now, the difference between 96 and today is that you're sitting here with QE still in the system, and so you don't really know if that means that it's going to be able to prop up the markets, and you're not going to get a heavy sell-off. But I would say that what you've had so far in terms of this, that's sort of a QE propping here, and back in where did that chart go? Back in 96, things would come apart a little bit more quickly, and so I wonder if we might get some more downside if we continue to see strong economic news. But the market's in this sort of perverse world where strong economic news is not good news, and weak economic news is good news in terms of continuing QE. So we'll have to see what happens. But I just remember 96 being an environment that was where things were sort of skewed that way, and this reminds me a little bit of that, just in terms of the backdrop to the market action. Anyways, let's see. So what's going on today? We got what I notice here is bonds are crashing, and you look at the TLT, the 20-year plus Treasury bond. You see a gap down to a new low, trading at the lows of the day. Now, Dr. K, can this be good for stocks? I mean,
well, on the one hand, you have the argument that says crashing bonds means the money's got to go somewhere, and therefore stocks seem a logical place for money to flow. But the bigger picture is that if bonds really continue to become unglued, that's just not good in general. And I think that that creates a serious situation in not just bonds, but in stocks as well.
Yeah, and I just wonder how that can be good. Rising interest rates, how that can be good for stocks. at least in the short term. I don't know if there's some sort of asset shift going on right now, an allocation shift with the market up and finding some support off the lows this morning. But this doesn't seem very good, and some people will say, well, my duration is short, so I'm okay. But you're seeing the SHI, which is the 1 to 3 year Treasury ETF, that's down today, trying to find some support off the lows. The other one is the 3 to 7 year, and that like the 20-year plus is breaking down to new lows, and that doesn't look good. So I think you're in a kind of a muddy situation. So the best thing to do probably is to take things on a stock by stock basis and maybe work with individual stocks. So let me take a look at some of the stocks that I'm keeping an eye on today. This morning we've got the big movers are these 3D stocks. There's news out today that Microsoft is going to start to push through 3D printers. I'm not quite sure what that means. I guess that means they're going to start promoting them more aggressively with their systems. And so you see Stratasys is moving up off of here. It gapped up off well, it didn't really gap up. It's moving higher. I don't know. That looks like it might hit a pocket pivot volume signature today. Would you call that a pocket pivot, Dr. K, if it clears these two volume bars here?
Yeah, that would be. But it's
Okay.
it's a bit of a defective one because it's not a double bottom, and you had that big down volume day. Let me just see on a different chart here. Yeah, I mean it's not the kind of price volume formation that I like to see. I mean, I would like to see an undercut of that prior low for a proper double bottom. So this double bottom is defective. So I'd be a little bit skeptical about about buying into this kind of pocket pivot. And it's definitely going to clear the volume. I mean, it's definitely going to clear the sufficient volume. But yeah, I'm skeptical in this pattern. And also, this stock tends to be quite sloppy. Therefore, this kind of pattern to me is not the buy point. I would want to wait for the stock to do more work in its price volume pattern before I would go in and take a position.
Okay. And I notice also 3D is moving up, but the volume is pretty light. X1, which is this stock is crazy. Had a nice run last week. It's just kind of hanging up here. This thing's gone parabolic, so I'm not sure I'd be buying this one up here. But you're seeing those stocks moving today. Tesla's hanging out, trying to sit in a little flag after this breakout. But notice not much volume on the breakout, and so it makes it a little bit problematic in terms of figuring out, whether you should be buying this thing up here or not. So it's very tricky. I think if it holds above, and a pullback could pull down to the 10-day line down at 109 and change, and maybe that would be a place to try and buy it. I'm a little leery of buying it up here. Based on the low volume, and today it's up a little bit on light volumes, and nothing really what I would consider really committal in terms of, like Dr. K was saying, in terms of institutions coming in and just swamping and coming in and buying stocks. I noticed even SunPower, which is a stock I've liked since it had this little pocket pivot right here, is V-shaped, but it worked, and now it's breaking out to a higher high. This is a new 52-week high, but the volume is running at a below average rate right now. And so, again, it's somewhat problematic in terms of what to do, and it seems like a lot of the action is choppy, and you're better off trying to make opportunistic trades on the long side, and then take a few percent off. In another solar stock, Solar City had you had a pocket pivot, I believe, right here, coming off the 10-day, and it's a bottom fishing pocket pivot. It's trying to round out, one of these roundabouts, as I call them. And it's pulled back in, and it's sitting right around the 10-day. Now, do you buy it here with the idea that it's going to come out of here? I guess you can give that a shot if you think the market's going to turn and go higher, and that might work out. But it's a volatile stock, and that's possibly one to look at. First Solar's been trying to come back. It's in a weaker position. The other two, SunPower and Solar City, are above their 50-day moving averages. It's forming this little pattern above the 10-day moving average. The black line there is a 65-day exponential. But it's trying to hover along the 20-day moving average right here, which you can see. And, I don't know if this thing turns and goes higher. If the market goes higher, maybe it does. But I'd have to say solars have been one of the leading groups, in fact, the #1 group right now, I believe. And if I was going to come in on any of these, I think I might try this one out and use a stop at the 10-day moving average if the market's able to turn. So, kind of touch and go, not really that well defined. But my thinking here is you could use the sort of pod or punch bowl of death theory in reverse. In other words, this is a hot IPO, had a huge move. Now it breaks down sharply. If the market turns, I would look for this maybe to form a big pot, and so that implies that you'd have a rally back up to $50. And that would be definitely a nice move from here. So if you can catch that and the market turns, then I think you might be in good shape with that. So it is a trade that I'm looking at right here, and I haven't bought any shares yet. I did buy some down here and sold them into the move here, and took the profit right away because I know how this stock is volatile and the way the market's been. But now it's back into a spot where I might consider buying it. The closest to the 10-day I could get it, the better. So let me see here. What else is going on here? I know it's Cree also. And I think this pretty well exemplifies what is so difficult about this market. If you bought this pocket pivot breakout from, I believe it was a 3 weeks tight pattern here, you got stopped out here. I had some of this, bought it on this breakout. As soon as it got back down in here, right above, say, 63.50 or so, I just blew it out. And I thought that was smart because I would end up, you came down like 14% off the peak here, so you would have had to have blown it out based on a 7 to 8% maximum downside stop. But look at what this thing does. It just breaks down nastily. Volume is above average for 4 days in a row as it gaps down and breaks down through the 50-day, and then the thing just V's right back up to new highs. And that's admittedly a tough situation to hold on to. And if you had some of the stock and you got shaken out at the lows, that pretty much sucks. But that's one of the reasons why if I have a breakout and it starts to falter, I'm just gone. I'm not going to sit here and argue with the thing and hope it comes back because I don't want to have to sit through this kind of garbage. You did get a pocket pivot right here. It's a V-shaped pocket pivot, but in this market, that sort of stuff seems to want to work, and in this case, it does. And you come out and you break out to new highs. What will you do with the stock now? Do you buy it here? I don't think so. I think you had to buy it right in here on the pocket pivot. But even then, this V-shaped action coming straight off the lows here is a little dicey, and that's just very difficult to come in and start buying. So tough situations here with some of these stocks. Let's see, what are some of my other favorite stocks here? If I can pop through a few examples, let's run down my hotshot list. Again, Kihu, a big V-shaped move. That's tough to buy into. I like this iRobot. It's been acting well along the 10-day lately. Before it wasn't, but it's kind of hanging out okay for any of those of you who own it. It's still hanging in there okay. Angie, which had a pocket pivot here. I've liked this stock. You gapped up. It's color-coded red because it opened up here and it's coming in. A lot of the stocks that are up today gapped up this morning and haven't made much progress past their gap up moves, I think, except for some of these 3D situations. And that becomes problematic as well. Tesla we already talked about. InvenSense, I know somebody's asking about that one. I think the stock's basically stuck in a flag, and what I would be trying to do here is if I like the stock, I think you'll see a pullback to the 10-day moving average at some point. I would look to buy in on that. I think it's better to buy this stock on weakness because whenever it acts strongly, it never follows through. It comes right back in on you, and I think that it's better to try and be opportunistic here and buy the thing on a pullback into the 10-day, which might be a possibility. Notice, though, it has held above the 20-day. It did that. Last week we were talking about it. I mentioned that if it was able to hold the 20-day, it might be viable, and the pullback using a quick stop here. So, that's pretty much where this is at. You had some news that they are being designed into the new iPhone, but that hasn't, that caused this move. But you haven't gotten this big jack to the upside that I was hoping you would see in the stock when some of that news came out. Let's see. I'm just going to continue down. Lionsgate, here's a nice. This might be considered a pocket pivot because these big volume days here. That was a Russell rebalancing last Friday, and is that right? Was it last Friday? Yeah. And
yeah, that's right.
And so it throws a lot of the volume comparisons off. So now you're sitting here. That could have been a pocket pivot, but it's hard to say. But the stock's now at new highs, and it acts okay. Splunk is another one. You had a pocket pivot actually down here, and then another one here, and the stock has continued to new highs. But notice today you're going to higher highs, and there's no real volume behind the move, which again becomes problematic. So I think right now we're running 46% below average. So I'm watching some of these leaders, and you can make the case that yeah, some of these leaders are acting well, but I don't see the volume there, and that's a problem for me. And it's definitely a problem in terms of trying to bop into these stocks and get long in this market if you think this rally is going to hold. Now, Dr. K, do you think we need to see a follow-through day in order for this rally to be considered a resumption, or for the model to go to a buy signal, or is it just a new high here and a higher high?
Just basically a new high, or a higher high. I mean, we don't need to have a new high, and we don't need to have a follow-through day for the model to switch out of its sell signal and go to cash or a buy signal. Just because we are in the midst of full QE from all the central banks. And it just, if the market wants to go higher from here, then, the model sell signal today is opportunistic and anticipatory to temporary market weakness, or more than temporary market weakness. But in other words, this sell signal is designed to be a fairly short-term one, because we do know that QE is going to be pumping for at least another couple months. So it's well aware of that. It's going to be very nimble and switch out of the signal possibly as soon as Monday, if the market has a good close today, and then continues higher on Monday.
Okay, I'm going to go through some questions right now. We've got a few. Somebody says the Russell is currently 0.3% below its closing high of 999.99 on 6/18. It is above all of its moving averages. What is the objective evidence of weakness to short this index by buying TZA here, Dr. K?
Well, essentially, if the market were to have a pullback, the Russell, the small caps are what get hit the hardest. So if the model, in other words, is correct about the market having a pullback here, you're going to get your best shots with small cap stocks, and that would be represented by the Russell 2000. If you look at the Russell 2000, every time it has had a pullback this year, it tends to be steeper than, say, the S&P 500 or the NASDAQ, for that matter, as weak as the NASDAQ's been.
Yeah, and again, I would emphasize, too, that despite some of these stocks moving up, we're not seeing big volume in some of these leading stocks that are moving higher, which makes us suspicious. The other thing here is if you're going to go to a sell signal, it seems to me that right here at resistance would be the smartest spot to do it. So just because it's within 0.3% of its high, that has represented resistance before. So maybe in this case we're going to run into resistance, and I think it makes a lot more sense if we feel there's some weakness in the market and potential to roll over again. It makes a lot more sense to come in here with a sell signal than to wait for it to break down where you could get in an oversold situation like we did last time. Because you had a buy signal here, and then this thing just came down hard for 4 days, and we went to neutral here. And that occurred right when the market was oversold and you had a bounce. So I think it makes more sense to come after it here. It doesn't mean it has to work, but a lot of times I like to short into rallies. So, Dr. K,
S&P also has it's right at the 50-day as we speak, so that might serve as
yeah, that's another factor too. Yeah, exactly. And you're looking. I forgot to mention that because the S&P is trying to get above its 50-day moving average, but it hasn't. So on the other hand, you have this index acting much weaker, and you're being led by a bunch of smaller cap stocks in the NASDAQ and the Russell 2000. That aren't really showing any huge volume power to the upside. So it's sort of a muddy situation, and I'm pretty cautious here. I'll come in and test on the short side, and I'll get to some of that in a little bit. And I'll buy some longs, for a quick trade. When I was on the golf course Wednesday, and around with around a half hour or so, I noticed Tesla was under 115, so I jumped in and bought some shares, and they jumped up $3, $4 a day, and I sold them. And I was sort of looking for that. I figured we would get a strong jobs number based on the ADP report, and so I figured that would start. That might get us jacking on the upside, and it did. Okay, and so that that's in and out basically overnight on an overnight trade, and I don't know where the thing goes from here. But that's the sort of thing I find myself doing, and I have to say profitably so, and it's worked out. And those of you who've been on the chat room, we talked a lot about a lot of those situations. So, that's just kind of the way of the market these days. Dr. K, question for you. Japan, the land of your ancestors, at least on one side of your family. Japan looks to be rallying again. Are you looking at any ETFs like DXJ, I guess, to play Japan?
Yeah, EWJ is the main one that I look at, and it certainly
looks like
has
a short.
It certainly has had that steep correction, and now it's trying to complete the right-hand side. But that again, that's a pretty defective pattern. It's not a double bottom. The right the first drop is lower than the second drop, so the second drop should be undercutting the first drop. So a bit suspicious here. I'm not looking to do anything really with the Japanese index where it's trading currently, and I'd rather stick with the indices where where the model is quite familiar. Yeah, this one just looks like it's in no man's land right now. And also keep in mind that Japan doesn't always have to correlate with the rest of the world, since it tends to beat to its own drum. So that's another factor that increases the risk in dealing with Japanese indices.
I'm with you on that one, Dr. K. VRX, you had these pocket pivots around this secondary offering. And stock ran up. I actually bought some of this in here right along the 10-day. It ran up. I sold into this move, and I figured it would come back into the 10-day. So my view is, may need to base. He ran into some resistance here, so it needs to base. But again, that was an opportunistic trade. It's very tight along the 10-day. I might have had more confidence in the move if it had been going along the 10-day for a longer period of time. So because that will set up a better move, and if the market was turning, and you're still in this sort of muddy waters, to bring up an old famous blues man for those of you who are into that sort of thing, but definitely in muddy waters here. Overstock, where would you sell Overstock? Let's see, what is it coming down today? Yeah, see, here's a thin stock. It has nice pocket pivot here, it runs up, and then kaboom, the gooey kablooey, to quote the old comic strip Calvin and Hobbes. And now you're popping here, so where would you sell it? My view is if you bought this and it broke out, and I talked about this with Cree, if it fails and starts to fail at the breakout point, I'm just gone. End of story. I just go away. I don't care if it bounces or what. I just go away. I can rethink it later. Because in this market, I think you can run into some problems very quickly if you don't act quickly and you sit there too much like Humpty Dumpty, sitting on the wall, getting ready for a big fall. And so I don't hang out. In this case, how would you handle this, Dr. K, if you bought this pocket pivot and you're still holding the stock? What would you do here?
Well, with the stock right at the 50-day, you could use the 50-day. At worst, you'd use a violation of the 50-day to sell it if you're still sitting on this position, because it's pretty close to probably where you're going to end up selling it if it does violate the 50-day. In other words, no point in selling it right where it's at. I would have probably sold it on that second day. Well, really, it was on Wednesday, because you had a gap down, you had a lot of volume coming into the stock, and I wouldn't wait around. At that open, I probably would have just sold my position.
Just puke it up. Yeah, I mean that would have been violating the breakout point too. So from my perspective, it was a sell there as well. Do either of you see any sort of base formation on the indices like the S&P? Well, I don't. To me, you're rallying up into this declining tops trend line. If you can get above that, then maybe you would say this is a base. But it's pretty sloppy, and we don't really look at bases on the indexes per se. If you're looking at the S&P, there's no real base here because you're still under the 50-day moving average. So I don't see any bases on the indexes, but that's really not relevant to the way we operate in the market. What we look for are bases in stocks, and that's something else altogether. The majority of the leaders in liquid glamours, as Kevin likes to call them, I guess you're referring to Kevin Martyr, seem to be doing very well during this correction, and along with the regional banks, techs, and some biotechs doing well. That leads me to believe that institutions, while not buying much, aren't dumping their best stocks. Wouldn't this portend more of a short and shallow correction? Dr. K?
Well, the thing about also these indices about basing formations is that they're not very clean, and it is on S&P and on the NASDAQ. I mean, new highs are meaningful, and double bottoms can be meaningful, but a lot of it's a lot of noise, just a lot of noise in these market environments in the last couple of years. So you can get hoodwinked trying to anticipate a base breakout that goes nowhere. Or maybe it goes for a couple days and then it just rolls right back over. I mean, a good example of that is the S&P 500. It had a very clean, tight breakout on September 6th of last year, and it went up for a few more days and then rolled back over. So you're not really getting the kind of powerful trends that you'd like to see in this kind of environment. So we're back to basically dealing with price volume action of major stocks and these leading indices. And
Dr. K?
Yeah.
But would you say that with some of these leaders and liquid glamours, as Kevin likes to call them, seem to be doing very well during this correction, and along with the regional banks, techs and some biotechs are doing well? Would that lead you to believe that institutions, while not buying much, aren't dumping their best stocks either, and does this portend more of a short and shallow correction?
Well, I mean, you do have the XLF, which has been showing quite a bit of strength. Obviously, that's bullish for the market. Certain stocks like Tesla are hanging very tight. That's bullish. You don't have the big institutional money, though, participating in this bounce. That's quite bearish. There's a lot of cross currents, and that the market is at resistance on the S&P and also on the Russell portends at least a pause here. If it could get above these resistance points, say on Monday, then the model's not going to stay on a sell. It's going to be quick to move out of that sell signal. But because we're at resistance here, it's worth a shot to see if we do get a pullback of some sort and maybe profit quickly. Also, if you get that kind of pullback like we've seen earlier this year, these pullbacks go for 2 days, 3, 4 days, very short periods, and then the uptrend resumes. But in those few days, your time value is quite enormous because you got the pullback, and then then again the model is going to be very wary of staying on a sell signal. If say the market has a 3 or 4 day pullback here, it's going to be very nimble in this environment. So it's more likely that it's going to take its profits sooner than later if we do get that sort of pullback that we've seen earlier this year. And in something like the Russell 2000, when it has pulled back this year, you're getting that first pullback this year was 4.1% pullback. The second one was 5.8%. The most recent one was 5.9%. And this is occurring literally in about 3 or 4 days. So you've got great time value.
I'm noticing the XLF just seems to be in this downtrend, and it finds resistance pretty much at this declining tops trend line here. And while you have some of these regional banks like M&T Bank, which has run up, doing well, you have places like Goldman Sachs. This is sort of looking like a short here. And I think I might be looking to short this on any rallies up from here. It might even just be a short from here. But I noticed some of those are looking a little bit ugly. So you don't have financials in general acting very well. The big money center banks like Citigroup are not acting very well. Whereas Wells Fargo, which is sort of a money center bank, but also sort of has a little bit of regional aspect to it as well, it's doing a little bit better. So it's a mixed bag among the financials. I'm not sure what that's telling you. So it seems sort of odd to me. Don't you think? There's not.
Yeah,
the parameters are, but
the strength on the XLF is quite high relative to most of the other indices, and that has to do with just the overall action for this year. I mean, it's been in a stronger uptrend, and then the recent pullback is it's still keeping the overall ETF at a high level price wise. In terms of price momentum, and so if you look at these individual stocks, some of them are looking okay, some of them aren't, and some of them are under their 50 days, and the Goldman Sachs, obviously these are not looking so good. So you have to weigh it all in, and when you look at the financials, the longer term picture is that they have been doing better than the overall market. They are outperforming. The short term picture is that they're not. They're taking a stumble here. So again, it comes down to being nimble because if the market uptrend resumes, so very well could financials. That is, if also the economy just doesn't recover, and that's the thing. The odds seem to indicate that the economy is going to take longer to recover than people think. Therefore, quantitative easing is going to be on full tilt well past September, and therefore the market uptrend will resume, and we'll see this resumption also in the financials.
Yeah, and because you have some regional banks acting well, I'm not quite sure what's driving that per se, but you do see some stocks acting okay. It's not like you're getting any big upside out of them, though. And some of the action has been very bizarre. Here's Amazon moving to new highs. This had a breakout here and then failed on the breakout, bounced off the 50-day, and now it's moving to new highs. So there's a big stock, NASDAQ name, trying to break out of this sort of choppy base that it's in, but so far it's working. Celgene, I still consider a short, and it's sort of drifting up. But this is only going to work if the market breaks down. You know, these things will break down. You can see the last time when it broke down, the market came off back in June, middle of June, and that took this thing down and undercut the lows, and now you get a logical rally back up to the 50-day. It's skidding past it, and resistance might be at the high at 123.44, somewhere around in here on this day. And that to me it still looks like a short to me. I don't think I want to be long the stock. It could be forming a double bottom, and that's still kind of weird here on the weekly chart. You can see it's not that, there's no real spike in here or middle of the W here. It's very, very muddy in here. So, and kind of watching that. And the biotechs, the big biotechs have been an area of weakness lately. And you look at Biogen, that might also be a short. It seems to run into resistance up here at the 225 level roughly. 224, 225, and doesn't seem to get past that. You notice today, stock was up bigger. There's not much volume in it today, and it's sort of fizzling out here. And you can see some of the other big biotechs like Amgen having some trouble. Gilead looking similar to Celgene and Biogen. So my thinking is, if the market breaks down, this is a go-to group on the short side. So I'd be coming after Celgene, Biogen, maybe you could even go after Gilead and Amgen, although I think Biogen and Celgene might be the two that I'd want to focus on. But I definitely would keep an eye on those as potential short sales because this group is weak. Now, I would emphasize that you don't want to mess around. I don't think I'd mess with this one. And somebody asked us, you know, on this day, was this a short? Apparently not. You had big volume as a result of the Russell rebalancing. It went below the 50-day moving average and actually ran into it and moved down from the 50-day moving average, but now it's above. And I think these smaller biotechs you want to stay away from on the short side because you could end up in a situation where you know, you're short something you think is breaking down like Onyx, and somebody makes an offer to buy them out, and the thing launches to the upside. So you got to be very careful there. So somebody's asking about Solar City, but I already discussed that. So one to keep an eye on, I think. Splunk, I already talked about. Diodes. That stock just continues moving higher. It's a small cap name coming out of this big giant cup formation. So there's nothing wrong there, just acting just fine. NXST, Nexstar Broadcasting. Some of these are acting pretty well. Notice Sinclair also is holding up along the 10-day moving average, so you might want to keep an eye on that one. For a pocket pivot, buy point coming off the 10-day moving average, that's a possibility. But I notice most of those broadcasting stocks are looking pretty good and holding up pretty well. So that would definitely be an area I'd be keeping an eye on if the market resumes its uptrend. Blocks, you know, we talked about this one when it had a viable gap up. It failed on that, but there's a pocket pivot here, right here, which is a little bit funky. It comes from a point just above the 10-day, but it's moved higher. And you might say, if you don't count this volume, which was due to Russell rebalancing, you might say that this was a pocket pivot, a continuation pocket pivot along the 10-day line. That acts really well, and that stock's doing just fine. Illumina is the comeback kid. After the Bible gap up, it's been pretty steady. It came down in here. Notice on the weekly chart, it tested the 10-week line, and it's coming off of it, pulling back now. So it's no real buy points in the pattern that I can see right now. So it's basically just trying to work on this base, and it's at the top end of the range. LinkedIn doesn't want to give it up. It's been all over the place. But here's another one. You know, you had the pocket pivots here, and then it's another one here, and then the thing breaks down and violates the 50-day moving average. So, you know, if you had this, you'd probably be selling it. And then it turns right around, V's right out. Notice there's no big volume on the upside. And again, this is sort of what bothers me, and I wouldn't be buying the stock in the earnings. If you bought it somewhere in here and you got a nice trade, you got 10 bucks on it or so, I think I'd be looking to bank that going into earnings and just leave it alone because I don't really know what's going to happen following earnings. I think there's some risk. Dr. K mentioned weak institutional flows. What is this based on? Well, the fact that you don't see big volume in these names. You see LinkedIn running up, but there's no volume. You know, today we see SSYS coming up. That's got some volume, but the rest of the stocks in the group, DDD, not much volume there. You know, you got SunPower breaking out to a new high, not much volume there. So you're not seeing this huge volume on these breakouts or these moves higher. So that's what we're looking at. Are not regional banks a good place to be now, like SIVB profiting from higher interest rates? Well, I don't know if you want to be in them now, but I guess you could have bought the breakouts. They're just not something we would be looking at in most cases, based on the fact that SIVB had 15% earnings growth in the most recent quarter, so it's not really something that we would be looking at. What is KRE? Someone's asking us to look at that. That's another one. There's another regional bank. Netflix. Netflix had this little pocket pivot right here. It's a little bit funky, but it's holding up so far. So it's got this pocket pivot. You're going to be going into earnings soon, so it's really a matter of whether you want to hold something like that going into earnings. I think with earnings season coming up, it's back to playing earnings roulette. So you can sort of consider that and ponder that for stocks that you want to hold into earnings. Somebody says, I can't seem to get a break. Frustrating market. I'm down and feeling down. Well, the first thing I'd say is get over it. How you feel doesn't matter. And just because you run into some problems in the market, yeah, that happens to everybody. So you just have to deal with it and go over your mistakes, figure out what you're doing wrong, or maybe your approach is not working. And, I was down this year until, say, March or so, when I figured out that this market, you just need to short-term trade it, and you have to be being opportunistic and maybe buying pullbacks to logical areas of support, and then looking to trade out when you get profits. Like Tesla, for example, coming along here, and it comes off the 10-day and runs up 20 points or so from there, breaks out. I'm selling that rather than buying it, because what we've seen in this market is breakouts just don't really seem to work as well. And that becomes a problem. So you have to adjust to the market. If you can adjust to the market, then just stay in cash and wait for your next clean trend to develop. Don't get down. There's really no point in it. And I really have to emphasize that getting upset, like I hear some people losing sleep. It's like, you know what? If you're losing sleep, then get the hell out of the market and don't go back into the market. Because if you're going to lose sleep over owning some stocks, then you really shouldn't be owning stocks at all, because your psychology is not fit for the markets. And that's basically what I have to say. And some of these, you start feeling down. I understand that feeling, especially if you're relatively new to the market. But I can tell you, having done this for 23 years, it doesn't matter. It doesn't. It's not. There's nothing to it. Just blow it off, get over it, and focus on what you need to do to come back and be positive. Be optimistic and understand that the market isn't quite right. It's throwing a lot of curves at you. You get these bizarre, movements in stocks that shake you out. And you get blown out of your positions, and you buy them on a buy point, and boom, they come in like that and knock you out. And it just tells you what kind of environment it is. So what you do is you kind of ratchet it down, or you try and come up with a different approach. If that doesn't work for you psychologically, then just blow it off. Just don't get, and don't get down. It's only money. I mean, geez, Louise. Anyways, Tom, if you need a one-on-one session, a therapy session, I think Dr. K will be able to put you on the couch. And
the doctor's in.
5 cents a session, right? PKG, Packaging Corp of America. Well, this is a big, packaging stock. Next quarter earnings up 29%, sales up 12% in the last quarter on earnings of growth of 48%. So, it's basing. I guess, if you saw something you liked, like maybe this is a weird little pocket pivot, I don't know. You could try and buy the stock. It's not something I would buy, but it has been in an uptrend. You can't really fault it. Did you cover Apple? Well, I covered Apple on this day here. So stock was coming down, market was turning, and a lot of times they don't have to undercut the prior low. They'll find support on a retest, and they don't quite undercut it. If they start to turn, they'll just get out of the way. And I think the market was turning back then, and you were in the oversold bounce, so I thought it made sense to just back away. Now the thing's rallying up into the 20-day moving average. I'd like to short it coming up into this area around 430, between there and the 50-day moving average, if that occurred. But so far that you haven't seen that, and it looks to me like it's sort of in between here and nowhere, and it's not clear to me whether it's rolling over or not. But Apple's down and dirty, so the idea that it's going to break down, the only way I could see that happening is if we got into a very deleterious downtrend or breakdown to new lows from here, which is a possibility. So, take it as it comes, I think. But trying to focus on Apple, you might be a little late to the party. Like I said, I think if the market were to break down, I think the area I'd want to go to would be after some of these biotechs that are rallying. I noticed also there's been some weakness in stocks like CAT. They just continue lower. I think that's telling you something about the economic environment. Is that you, Dr. K? Did you say something?
No, that's just sound effects going off.
Okay, all right. What's happening? Is it? Oh, I'm sorry. It's just Joy. They took out the G. That's another one that's been pretty weak. Cummins Engine, CMI also has been pretty weak. I don't know if this is starting to shape up as a big pod formation that might be a short in here, right along the 200-day moving average. I'd like to short into rally into the gap like it did here. That would have been good, but a lot of these stocks are weak, and I think you got to keep an eye on them as potential short sales if the market starts to break down. And a lot of these are still up in their pattern. So focusing on Apple as a short, to me, it might be fruitless. But I think also earnings coming up at the end of the month. But I think if the market breaks down, you're going to see everything come down. Whirlpool, here's a nice break. So you would call that late stage base failure here. So now what you're looking at, and this is actually a good example. So thanks for bringing this up. Whoever brought that up, was a row here, I think so. But you're coming down and retesting. Look for a rally back up into this area, say 119, 120, up to 122.64 as a potential shortable rally. So let's see, what else? Anything else? Any other questions? I'm looking through some of these things. I noticed this DGI is that a pocket pivot? I don't know. I had one back in here, but it doesn't seem to go anywhere. Let's see, Green Mountain. Hovering at its 50-day. Is that a buy here, or is it going to bust the 50-day? I don't know. You tell me. I guess these things I'm not so keen on buying. This looks a little bit weak on the weekly chart. Google's another one. It's acting okay. It's in a base. But here's the thing here. I'm wondering if you got an improper double bottom, and some of these will move up, and then maybe they fail on the basis of that. So I think it's sort of touch and go. The stock's holding up in its base. It finds support along the 10-day moving average. So I think as long as or 10-week moving average, what am I saying, on the weekly chart. So I think as long as it holds above that, it's okay if you want to try and sit with the stock. Anyways, any other stocks that anybody's got anything to ask about? I know Proto Labs, crazy little stock, is holding up. Soda was a hot name for a little bit. It's starting to break down. Maybe it comes down to the 50-day moving average. ACAT, Acadia Pharmaceuticals, is holding up in a little flag formation, so it's acting okay. Can't really fault it. We'll see what it does following earnings. I think it's going to be critical to see how the market acts going into the close today. If we get a situation where the market sells off and we look weak, that could be trouble. So LL, I'm actually looking at this one as a short. You notice the building group is really weak today. Ryland getting whacked, Lennar getting whacked, and it's way below its 200-day moving average, undercutting this low, breaking to new lows. That whole group looks terrible, and so I'm looking at some of these stocks related to that, and I'm wondering if this thing running up into the 50-day, you got a failed late-stage base here. If this thing running up into here is in a short between here and, say, the 50-day at 83.34. So that's the way I'm looking at that. On the weekly chart, you got this big, ugly week off the peak. And when I was at O'Neill, the institutional guys used to use a general rule that when you saw a stock after a long run had a big breakdown on the biggest downside volume in the whole pattern after you've been on a run for a while, that's usually a top. So I'm looking at that as a potential top. And I think that you got to, if you own this one, I think you got to start thinking about selling it. You did violate the 50-day moving average on this day, and now you've rallied up. So, Dr. K, in a case where you violate intraday but you hold up, do you still consider this a violation on LL?
Yeah. Yeah, you sell intraday at the point it violates.
Okay, and so if you had sold, let's say by some stroke of luck you held on to the stock, and it's rallied up, now would you be selling it?
Well, it did violate it there, so I would you want to have your money in the best names. This is not one of those names. I would be out of it. If I had it today, I'd be thankful that I had it this long, but that's a stroke of luck. And you shouldn't use today's example as a reason to hold a stock past its violation point. Because sometimes when it violates a critical moving average, it violates it in a very big way. It could be down 5, 6, 7, 8% on the day.
Winnebago, well, that's a breakout right there. So, cup with handle formation, and you have a breakout. So it's just holding up. Nothing really to say other than that it's a breakout holding up. I guess people are buying RVs. Here's an improper double bottom. So MOH, what is that? Molina Healthcare, good earnings, decent earnings. Next quarter up 138%. Sales up 16%. It's neither here nor there. No buy points in the pattern. So if you got a little double bottom, but it isn't really cruising out of here, and then that might be an improper double bottom. So just watch that closely. Home Depot trying to come back on a base, but again, this is the housing sector's been weak, so I don't know what that means for Home Depot. I don't think I'd want to be going here. RH. This is Restoration Hardware. That one's been holding up since the Bible Gap up, so that's holding up fine. That might be a different situation, though. OCN, the mortgage servicing stocks, finding support along the 50-day, 10-day, or 10-week moving average. To me, these is getting a lot of selling, so I'm wary of this group, but they'd have to set up. NationStar, same situation, although it's much, much weaker. It's below its 50-day moving average. And I think if you saw a rally up in here, it could become shortable. This could be considered a late-stage failed base, and so any rallies up into the 50-day would have to be looked at as potentially shortable. New Skin, someone's asking about. That's a little breakout today, but I don't know if the volume is there. And this is a whole quandary with this market. 8%, it's running 8% below average right now on a breakout. I guess you'd have to exceed this day's volume for a pocket pivot, which would be sufficient for a breakout. But again, it's just kind of neither here nor there, and tough name to be trying to buy, especially in this big sort of pod position. Ocean Engineering, this is Oceaneering International. This is an oil stock. I keep an eye on these. They're trying to move higher, so this is trying to break out. You had some volume in here. No pocket pivots, though, in here at all, so no real buy points in the pattern, but just setting up in the base. You do have a proper double bottom, so that looks a little bit better. And I think in that case, you might consider, I don't know. The way we feel about oils is they're really not something that we generally play. What's your take on this one, Dr. K? I'll let you throw in your 2 cents.
The oils have been, with commodities have been weak, so be careful about the oils. They haven't been showing real signs of strength. I guess relative to commodities, they're going sideways while commodities are in a downtrend. But that downtrend that commodities are in, it's a very gentle downtrend. So it's not like it's not as if oil is well outperforming. It's really not performing, and it tends to be very sloppy in its trade, which is why we tend to avoid oils. They tend to violate the 50-day with regularity, with the exception of maybe one or two stocks in the entire group. And as to being able to identify which oil stocks are going to actually obey, say, the 10-day or the 50 days, quite a challenge. So these stocks are generally best to be avoided.
Yeah, Cabot Oil is another one like that. I tend to like these, the Silica Holdings, these frackers, and there's another one, High Crush, another one, but it's pulling in today, so they're kind of volatile. But
yeah, specialty groups within oil, the fracking. I mean, obviously there's something special within the oil group, and fracking is one such example. Right. Then of course that's viable. But just oil companies in general, if they're not doing anything spectacular or new or different, the N and Can Slim, for instance, then our interest is pretty much on the wane.
Here's a good comment, I think, from Guru Bob out there in Michigan. His comment is, frustration results from exaggerating the importance of desires, and I think that's very much true. You desire to make money in the markets, and you desire all your trades to work out, and when they don't, you get frustrated. I think it's just an emotion, and it results from your desire to be successful all the time, which is irrelevant, like I just pointed out earlier. Monsanto, that's a dog. I don't like this stock at all. It looks like it might be ready to break down even further. I noticed the FERTs, we talked about CF Holdings up in here, and it's continued to break down. And even undercut this target low, and now we're trying to bounce, and this looks pretty putrid to me. So the whole group looks pretty bad. Monsanto looks pretty ugly as well. And this is a late-stage failed base. This may be heading lower. I definitely wouldn't be buying it. But I don't think it's hard to say if it's in a shortable position here or not. So
group ranks in the bottom 10 percentile for quite some time as well.
Yeah, exactly. So I noticed I'm watching the UVXY here. We got into the TZA this morning at 29.26. So we're up on the position and on the sell signal, but I'm watching this UVXY trying to make a comeback. Let's look at some 620 charts here. Trying to make a little turn here. We'll see if it comes off. And the market sells off into the close off. Obviously, it's going to, but we'll see whether that happens. Someone's asking if FLT is a short here. No, not really. I mean, you are failing a little bit, but you're holding the 50-day moving average. You haven't really blown through it and violated it yet. So, it's hard to say. It is a late-stage pattern, so I'd kind of keep an eye on this to see if it develops into some sort of a late-stage short sale formation. But, in general, I think it's still a little bit too early. Remember, most of the time you want to short these after they've had some time off the peak. So when I look at something like a Celgene, you're about a month and a half off the peak here, so it still looks kind of weak. So, still noticing the market just chopping around. I notice Tesla's trying to move higher, but not much volume there. So let's see. Is it possible to be too optimistic? I think that is one of my mistakes, and I take on too much risk. Sign me up for a Dr. K therapy session. Yeah, it's possible to be too optimistic, but I think it all boils down to not necessarily optimism in terms of your position sizes. If you get all optimistic and you think you're going to make a pile of money and so you jump into massive positions right off the bat, you're either a plunger like me or you're out of your mind and you're taking on too much risk. And so I think it's more a matter of how much risk you want to take on at any given time. So I would not make it a matter of optimism. If you see a setup that looks right and you want to go for it and take a big position, then you just have to measure risk and make sure you don't sit there too long if the position starts to move against you. So again, I guess it is possible to be too optimistic, and that would be reflected in perhaps taking position sizes that are well beyond your tolerance for risk, and also doing so without any real idea of where you're going to sell the position. So, again, anytime you take a position, my view is you better damn well know where you're going to sell the thing if it doesn't work. That's basically the bottom line. So, anyways, any other questions before we sign off? It's 11 a.m. straight up here on the West Coast of the good old U.S. And I guess, what is it over there, about 7 p.m.?
7 o'clock on the nose.
What's that, Dr. K?
7 on the nose.
Right on the nose, yep. Anyways, that's all we got. I mean, you're in a kind of a, neither here nor there situation. We'll see if we switch to a buy signal on the model, and I think that's really the critical aspect here, and just see where this thing goes. You do see some stocks acting well, and I've got my eye on a few of them. We talked about some of those, and it's really just kind of a muddy situation. So, middle of the summer, QE environment seems par for the course for me. So, and this is usually a time when I spend a lot more time on the golf course. So, as I do have a country club membership that I don't use very often, so I probably should employ that more often during the summer just to keep myself out of the market. So, someone's asking. I'm going to do this real quick. SMH, what is SMH? That's a
Semiconductors.
Yeah, I mean, same situation as the market. It's made a lower low, it hasn't made a higher high, so you're just kind of in this chop zone. And it seems like that's what it is for a lot of these indices, and you may end up in a situation where you just continue to chop. That's a possibility too. And every time you try to come in long on what is that noise? Anytime you try to come in long on something, you're just going to get whipped around. So, my view is if you think this market's going to turn, then buy a little bit of this one. So that's my call on the day. Trade of the day. They should have me on Fox for that one. Anyways, that's all we've got, you guys. If you have any other questions, I know it's sort of a fluid situation and other things might come up. So if you do have any other questions, remember you can always email us at support@virtueselfishinvesting.com, and we'll get back to you as soon as we can. All right, that's all we got for today, you guys. Take care, and we'll see where this thing goes from here.
So long, everyone.